Good afternoon, girls. So we have been discussing about the circular flow of income. So last time we discussed about the circular flow of income in a two-sector economy. So two-sector economy comprises of the producer, what we call farms, and consumers household. But household supply the factors of production. This is the factors of production. It is going. You just look at this arrow. Arrow is towards this side, and for that the household gets factor income or factor payments in the form of income. So this arrow comes from farm and up to this. This is factor payments. This is the movement of income from farm to household. And again, and this income earned by the household by providing factor services to the farm is again utilized for the buying of the goods and services from the farm. So the same earned income, some part of the earned income goes to the farm in the form of consumption expenditure. A part of the income earned by the household goes to the financial system in the form of saving. So they just save for their future. So at the same time they earn interest. So that means the financial system, what so we call the banks, they borrow from the household. So there is always to and fro of income. And at the same time the saved income by the household is again utilized, is again invested to the farms. Farms borrow money from the financial system. So the most important part of the financial system is the bank. So the farm borrows money from the financial system, and in course of time, farm also saves some money from their profits for their future capital formation, for the enlargement of the farms and all. This is about the circular flow of income in a two-sector economy. Today we will just take up the circular flow of income in a three-sector economy. So as I told you earlier that this three-sector model, three-sector economy consists of three sectors. These are household, farm and government. So now with the help of a diagram we will just see how the circular flow of income takes place in this three sector economy. So in this figure, let us see, we have the three sectors. One is household, the one is farm, another one is government. So we just see the flow of income. So I'll just explain one by one, and this circular flow of income is enhanced and facilitated by the financial system. So in this diagram we just see household sector supplies the factors of production to the farms, and in return the household gets factor payments in the form of factor income. So household earn income by providing factor services to the farm, and at the same time the farms, by using factors of production, produces goods and services. These goods and services are again bought by the household. So again, in buying the goods and services from the farm, the household pays prices in the form of consumption expenditure. So the income flows from the farms and also from the household to the farm. This is about the two-sector economy without this. Okay, and we can say this three sectors economy is an upgradation of, an addition of the two-sector economy. So as I told earlier, so in this three-sector economy there is another sector called the government sector. Government gives wage and salaries to its employees, and not only the wages and salaries to the household, there is again transfer payment. Transfer payment is just given to the household not for doing some productive services but as a social security measures. So money flows from the government to the household, and money also goes from household to the government in the form of, say, let us say, taxes. What should we call direct taxes? So what are the direct taxes? So direct taxes are the compulsory payments to be given by household to the government. So household gives to the government direct taxes in the form of income tax, then professional tax and land tax, etc. we can just say. And again there is again a flow of income between the government sector and the farm sector. Government buys goods and services from the farm. So say so many public expenditure, say for the government establishment and other developmental works, construction works, hospitals, educational institutions and so on. So government also gives subsidies to the farm. Subsidies are nothing but the financial assistance just to encourage the production of goods of a farm. So we can just say that there is flow income to the farm from the government side. And again there is also flow of income or flow money from farm to the government, say in the form of direct and indirect taxes. So direct and indirect taxes are paid by the farm to the government. So I'll just give you some examples of say direct taxes. Direct taxes, some examples I can just give. Direct taxes example. Direct tax. Direct tax, I can give some example like corporate tax. Corporate tax. And one more example I can give. So say wealth tax. Wealth tax. Wealth tax. Then one more, so we can just give capital gain taxes. Capital gain taxes. And some of the indirect taxes, say given by the farms to the government, we can just say indirect taxes. So indirect tax, so we can just say, let us say excise duties. Excise duties or tax, what should we call? Then customs tax. Custom tax. Of course they pay taxes, but it is again in turn just taken from the user or the buyers of goods and services. So here I want to highlight some of the important roles played by the financial system in this model, in this three-sector economy. That is circular flow of income in three-sector economy. Financial system plays a very great role in the circular flow of income. Bank is the most important of the three pillars of the financial system. So see, we can just say that the household does not spend, as I told you earlier, household does not spend all the earned income. So some amount of the earned income the household use, say in the form of consumption expenditure, and another one is some amount, some percentage of the earned income is saved to the financial system. And so automatically household saves something to the financial system, and that saving earns some interest, and then interest goes to the household. So the household saving is a form of borrowing by the financial system from the household. So similarly, firms borrows money from the financial system. So the financial system through investors say invest money to the firm and the firm borrows. For borrowing, the firm pays interest to the financial system. So just to increase the what we call inventories, or just to increase the productive capacity of a farm normally borrows money from the financial system. So farm so money goes flow from financial system to the farm, and at the same time in the form of interest money also flows from farm to the financial system. Apart from this, farm at times save money out of the profit of the farm, so save out of the profit of the farm just for the future capital formation, we can just say. So automatically at that time, so money goes from, the income goes from farm to the financial system. So thus say financial system helps in enhancing the circular flow of income among the three sectors of the economy. So in this closed model, closed model means say we have two types of economy. One is closed economy, another one is open economy. In closed economy, there is no interaction, there is no say export import between the countries in closed economy. But in open economy, there is always interaction, export import, and capital movements, human movements from one country to another. In this our example, in this three sector economy, it is a closed economy. So in this closed model, total income can be found out by adding up say the expenditure, we can say the consumption expenditure, then investment expenditure, then we can say the government purchase of goods and services. I'll just give you in notes. So I hope you just understood the circular flow of income among these three sectors of the economy: farm, government, and household. So government, so we just see government, say from government to the household, it comes in the form of salaries and transfer payment, and from household to government it is taxes, various kind of taxes, income tax and all, and from here also farm to government it goes in the form of direct indirect taxes, and money flows from government to farm in the form of government purchases and subsidies, and the money goes from household to the farm in the form of the consumption expenditure, and the money flows from farm to the the household in the form of factor payments. So in this way, okay, there is always circular flow of income in different sectors of the economy. So you just look at this diagram again and again, so that you can say understand very easily. So we'll discuss this again when we discuss the four sector economy. So I hope you enjoyed the class. Bye bye. See you next time.